Well, I got to tell you, I don't care what it is. What goes up must come down, and it's coming down. Although I do think we're going to get a huge spurt up because the Fed is not going to be able to tolerate this. And more we're hearing about stagflation, recession. But, Wall Street wants you to think of diversification as stocks or bonds or ETFs that have a whole bunch of stuff in it, mutual funds that have a whole bunch of stuff in it, annuities, these kind of things, but that's not diversified because these are all dollar-based. So you've got to have some physical gold that is actually a diversifier for your portfolio because they don't really work like stocks and bonds that are so easily manipulated. Spot gold contracts, spot silver contracts, absolutely, they can manipulate those. But when you hold it and you own it, it runs no counterparty risk and it is truly outside of the system. And that's what we need to be. That's what I'm telling you right now. Aside from food, water, energy security, barterability, wealth preservation, community, and shelter, my retirement is in gold. My day-to-day living, my barterable position is in silver, mostly. Some gold for property taxes and things like that. But that's how I'm not saying I'm particularly diversified. I'll be honest with you. Because I don't own any stocks or bonds or mutual funds or ETFs or any of that fiat money garbage. Will that be true in the future? Yeah, on the other side of this, when there's a component of gold in the currency, and that's how I'm going to know that we are fully transitioned to the other side, because that's what's happened 100% of the time historically. Could this time be different? Well, only if public psyches have changed so much, but generally speaking, when confidence is lost inside of the system, then it's not so easy to get back.
As we've often witnessed, gold and silver prices could be reversing their trends. Lynette Zang believes that these precious metals are trying to break to the upside as they hover above resistance. The key levels to watch are whether gold closes above 1,860 and whether silver closes above 22. From a technical view, these are the levels to watch. The price action has subtly changed. Where we once would be an aggressive short, we are now holding our current position. We are no longer looking to add realizing. A close above the resistance levels could trigger a reversal.
Cracks in U.S. economy start to show as recession warnings mount. Look, did we not have an inverted yield curve? You think that magically goes away because they manipulated that inversion out? No, that's not how it works. It's not how it works. And this time is not different. It's not different. You need to be in the right position. You need to hold physical metals in your possession because that's what's going to protect you and your retirement plan. Turning sour, forecasts for U.S. growth and inflation this year and beyond have been deteriorating rapidly. That's what we see. You won't have a chance. I have so many people that will always ask me, when, Lynette? Goodness, Lynette, you've been talking about this for so many years. Look, I'm old enough to have learned this lesson. All in due time, just not necessarily mine. So people make a choice. They choose to buy gold, or they choose to buy a stock, or they choose to do anything. And then immediately they expect that whatever choice they've made for whatever goal they had, then it starts to materialize. But the world doesn't work like that. And we all know that. You live long enough, you've learned that. So I can't tell you it's going to be Tuesday morning at 8:35. But what I can tell you is that when confidence is lost, which is what they're talking about here, when confidence is lost, it can happen. It's slow, and then it's fast. And you can't get into position when that happens. You need to get into position today, right now, while you still have most choices. Because we don't have the same level of choices that we had when I first started in this industry, or even 10 years ago, or even 2 years ago. What are you waiting for? Get it done.
If you're trading, you must recognize changes as they occur and not to be too stubborn to change. The challenge is usually the closing days, making volume almost non-existent. From here, we will observe, But no, we will not be trading or reversing gold and silver until at least a few days later. Precious metals should be owned on a physical basis with capital that is not needed tomorrow or anytime soon. Trading should be done with paper, knowing that we can trade either side without emotions.
And the conclusion is that the distribution of outcomes suggests portfolios with gold outperform, no matter what, through inflation, through deflation, through stagflation, because what they do, what the gold does, is its job, holding your purchasing power intact. Central banks know this, but I like this because this shows gold sales on the bottom, gold purchases on the top of the central banks, and it goes all the way back to 1971. So they used to manipulate the price of gold by creating all these